Okay, so this is my computer screen. So let's dive straight into how I will do fundamental analysis on factory sorry, I say factory forex on currency pairs. If you've been following my YouTube channel, you know that I said I have stopped trading currency pairs. But when I stopped, I kept on making research on how to successfully trade currency pairs without all this you lose today, you make money tomorrow on currency pairs, because that has been that was my issue. So I want to be consistent with currency pairs because for stock market and the commodity market like gold and oil, I am consistent with my profit. But currency pairs, I can take a trade today, I make money, take trade tomorrow, I lose money. So it has been up and down for currency pairs. So that was why I scrapped currency pairs and I started trading stock market and commodity market. But the thing is that, okay, the thing is that I have always wanted to come back into the currency market, and I have because of that I've been making research. I want to understand certain things. So in today's video, some of the things that I found out and some of the things that I think I will be putting into implementation in my course of trading currency pairs is what I want to show you in this video. So let's just go straight to it. So first of all, I understand that there are certain economic data that affect currency that determines the strength and the weakness, the strength or weakness of currency pairs. One is interest rate. The second thing is inflation. Then the third thing could be GDP. The fourth is maybe unemployment rate. So these are some of the economic data that can affect currency pairs. So I'm going to talk about these things, and I'm going to also talk about how investor can also affect how investors see the market can and how their view of the market can also affect the currency you are dealing with, regardless of the economic data. Okay, this economic data that I've just talked about. So for me to understand this economic data, or for me to see the economic data, I use this particular website called Trading Economics. I believe most of you are familiar with it. Okay, so if you look at trading economy and you use trading economy heat map, this is their heat map, or should I say, because on my chart now there's nothing like heat map, it's just a table. Okay, so you will look at if you look at here this particular column, you will see that we have different countries there: United States, China, Euro area, Germany, Japan, India, United Kingdom, blah blah blah, France, Canada, Russia, and all that. So, and if you look at the upper part here, you will see that there are a lot of uh, various stuff there. We have GDP growth, we have GDP, we have GDP growth, we have interest rates, we have inflation rates, we have jobless rates, government budget, debt to GDP, we have current account and population. Okay, I'm not going to focus on this current account and population, but I'm going to focus on this main one. So talking about GDP growth, first of all, let me start with GDP growth. How does GDP affect the currency of a country? When you see when the GDP of a country is doing well, is performing well, it shows that the economy of that country is stable, and a lot of investors may want to keep saving money or buying the currency. Okay, basically it's strengthening because that is a positive sign, and it's strengthening the currency of that particular country. So that is for GDP. Interest rates, ordinarily interest rates, when there is high interest rate, okay, when interest rate of a country is high, that particular currency is going to attract investors, is going to attract people, because a lot of people will start putting their money, buying that currency and put the money into the bank because they know they are going to get high interest rates from it. So it usually attracts it actually increases the value of a currency. So interest rate, that is basically, I'm just using basic explanation of all these things. So that is for interest rate. Then inflation rate. Okay, inflation rate also affect the value of a currency. If there is high inflation in the country, then you should be rest assured that the value of that currency will drop. What certain amounts used to what uh, before will be reduced, and that also sends signals to investors. Investors may want to take their money away from such a market when there is inflation, so that affect the currency of that country. So basically that's it. Then jobless rate, unemployment, which is jobless rate, unemployment also affect if unemployment rate is high, is also going to affect the country currency, because it tells you more, it shows you how the country economy is doing. So these are the things, these are the data you probably want to pay attention to, basically. So first of all, if you intend to trade United States United States dollar, for example, this is the thing you do. Okay, first of all, you want to look at GDP growth. Is it going well compared to, let's say I want to trade this currency with Japanese yen now. So I will look at Japanese yen and United States data. I will compare them together. First of all, let's look at their GDP growth. You can see the GDP growth of United States is 2.3%, but that of Japan is just 0.6%. Let's look at their interest rate. You can see interest rate, United States interest rate is very high, 4.5%, but look at Japan interest rate is just 0.5. In fact, their interest rate used to be negative before, they just increased it to positive recently, and I still hear that they want to increase their interest rates, which could actually encourage some people to put their money into, but for now their interest rate is just 0.5, while United States interest rate is 4%. Okay, now let's look at their inflation rates. Okay, you can see now there is a moderate or slight inflation in the United States, but it's not as worst as that of Japan. Japan is 4%. United States is 3%. Okay, so that tells you that when it comes to inflation, United States is kind of better compared to Japan. But inflation rate, you want to keep it around 2%, basically. Okay, you want to keep it around 2%, but above 2% is not too good. So you can see the color here is even pink, which tells you that it's not too good. But if you look at those ones with high interest, like India here, you can like Russia here, look at their inflation rate is very, very high. Okay, so you can see it's red, it's not pink like this. Okay, and this one too is higher compared to United States. We are dealing with these two currencies. Now let's look at jobless, the unemployment rate, which is jobless rate here. So in terms of unemployment, United States kind of have high rate, 4%, but Japan is 2%. And yeah, basically. So if you look at all this data, if you compare this data now, you will discover that United States economy data is more positive compared to that of Japan. So therefore, you will discover that in terms of currency bias, in terms of these two, what would you think people are going to want to consider buying the currencies, or which country do you think its currency is going to be more stronger? That is going to be United States, definitely. So now that you understand that, the next thing you want to check, the next thing you want to confirm, but that you can't confirm it here, is you want to first of all understand if there is any policy or anything, or if there is anything going on, if the central bank or the Fed, now in the case of United States, if they are trying to do something, if there is something going on in these two countries, okay, that could affect the bias again. So, and that one, what you just have to do is basically you just have to come to the, now let's say I open what's it called, USD JPY, for example. USD JPY, you can actually come here and read if there's anything that is affecting, that apart from this data, that could affect either of these two currencies. Take for example US stock mover. After TEMA CPI, you want to understand dollar struggles to lift up flow as global trade war ramps up. Okay, so you want to actually understand what is going on in this regard. Okay, so when you read all these things and you understand and you are sure that there's nothing going on, then you want to consider buying this particular asset. So now, then you want to consider trading this asset. But now, considering apart from the tariff, which tariff out there, which is affecting US economy somehow, so you want to consider buying USJPY over Japanese yen based on the economic data that you've seen. You want to consider that. So all this four that you have been seeing here is as a result of the tariff plans that have been going on, the trade war and all those kind of things. That is what caused this particular move down. Okay, but if you are to consider the economic data, you want to be looking at buy opportunity. Let me show you this in a clearer picture. So you can see the market going high and high before the tariff. Okay, you can see it go high and high. So you want to consider buying because the market actually favor buy. You can see the market has been in an uptrend. Why? Because US data, economic data is far better compared to, you can see it's far better than Japanese economy data. So the little drop down that we have here, okay, is influenced by the Donald Trump tariff plans and all those kind of things, and the trade war that is going on. So as soon as that fades out, you will discover that as soon as that particular tariff plan war trade war start fading out, you will see that this particular pair will continue to jump to the upside. So that is what you want to do for other currency pairs too. So now that we are here, you want to consider looking for buy opportunity as soon as you confirm that the trade war may not have significant effect. As you can see that in the you can see the market even pushing up here, and I can see that I think I saw an article that said dollar struggles to lift off lower lows as global trade war ramps up. I think, yeah, basically we are getting to the end of this trade war. I have not read this article, but these are some of the articles you are going to read to understand what is actually going on, so that you won't be caught up after checking the fundamental the economic data. So basically, this is what I want to show you. I believe it's helpful. If you have more question on this, or if you want me to there is any part of this whole thing that you don't understand, you want me to explain, please comment it below. I will get to it ASAP.